Let's bring in Rob Martin. He's the senior U.S. economist at UBS Investment Bank, as well as Riley Walters, the policy analyst for Asia economy and technology at the Heritage Foundation. Gentlemen, thanks for joining us this Friday morning.
Good morning.
Riley, I want to begin with you. Do investors think that the president has more bark than bite?
You know, there's certainly a question out there that whether investors have priced this in, and I think there's a lot of pessimism about whether the president will actually go all in and increase the tariffs on every single thing that we buy from China. But I think it is a real threat, and certainly I think Americans should be concerned, as already half of the things that we buy from China have become 25% more expensive, with potential everything else to go.
Rob, has UBS put a number on collateral damage for all of this? Oxford Economics is out with some numbers, and they say with the China retaliation, that would cut U.S. GDP by 0.3% in 2020 and China GDP by 0.8% in the same year. What do you think?
That's right. We've contemplated it as well. We think that the first round of tariffs already have subtracted about $140 billion from the U.S. economy, so about 70 basis points off the level of GDP. We see a further harm from the rise to 25%, another 3 to 4/10. If we go all in, if the tariffs rise to all goods coming in from China, we see as much as another 100 basis points of harm to the U.S. economy. Those numbers start to become quite meaningful.
Yeah, they do become meaningful. And quite frankly, when you're in the shopping mall, Riley, they could become scary if consumers eventually get hit pretty hard by all of this. What's the best case scenario that you see?
The best case scenario is that perhaps we have some sort of summit between the presidents, potentially before the G20 at the end of June, where they could finally come to some sort of resolution. But of course, we might not know. Certainly the talks that are happening today and the talks that have happened over the past month have been pretty non-transparent. So we'll have to wait and see. Obviously, you know, these talks have been pretty closed off. And so if the president tweets something good, I think maybe markets will react in kind, and we will have to see.
Yeah, well, markets are reacting not too shabby this morning. I mean, the Shanghai Composite in China, Rob, was up over 3%, and we're not selling off as of yet right here in the U.S. What do you make of it?
Well, I think one of the super positive signs right here is that negotiations do indeed continue today. One scenario would have been that the president raised the tariffs last night, and then the Chinese go home and there's a hiatus in the talks. Instead, it looks like the two sides want to continue to make progress. That's a positive sign for ultimate resolution. And
Riley, you're hopeful that June, best case scenario, before the G20, that there is a deal? June's just next month, though.
Certainly, yeah. I mean,
yeah.
There are some questions whether they can meet before then or not. I think it's still possible, but, you know, we'll have to wait and see.
Riley, the president said, look, you know, what's going on with China, obviously, you know, is bad. He said, quote, "I don't blame China, I blame past leadership." Is that a swipe as we look at 2020? He needs a win. He needs a foreign policy win. He needs a strong economy. Is that a swipe at the comments that Joe Biden made earlier that, oh, look, why are we afraid of China?
Certainly. I mean, I think Washington has awoken to the potential threat that China can pose, but, you know, I wouldn't necessarily agree with the tactics that the administration has been taking either, imposing tariffs on essentially American consumers and not Chinese themselves. I mean, there are other ways to deal with the threats that China present that don't directly harm Americans as much as we've seen with these tariffs.
Final question to you, Rob. Is there a situation we can find ourselves in where we're reversing the order that we've seen? So the stock market starts to sell off and remains under pressure, but the U.S. economy is doing just fine. Do you see the tariff situation and this trade war creating that scenario?
Well, it's difficult to know. You know, from an economic perspective, it's really hard to see the U.S. economy thriving under this type of tariff regime. Tariffs are just taxes, of course, but 25% tax rates imposed in a relatively short period of time are difficult for the economy to absorb.
Yeah, and for companies, you start to see, and we will start to see this eat into their gross margins and their bottom line. Rob, Riley, thank you.
Thank you.
Thank you.